you summarize where the tax provisions of the Student Success Bill are now, recognizing that things are still in flux?
Yeah. Well, it looks like the one place in our tax code where we could raise enough money to pay for the recommendations from the Student Success Committee is on the business side, which is one of the lowest tax burdens in the country. Our businesses are down around 47, 48 in terms of overall tax burden. That's why Oregon is looked at as such a great place, a terrific place for the business tax climate, because business taxes are so low. And primarily that's because we don't have a sales tax, and a sales tax is paid in sales tax states by about 40% of that comes from business. So that's where we're looking, and we're looking at a similar kind of a consumption tax on business that would be paid by business, and we're calling that a corporate activity tax, and it would raise about $1 billion a year. And even with that, business in Oregon would still be slightly below the national average in terms of the business tax burden. So that's where we are now, and there's some nuances to it. We're going to include a personal income tax cut. Groceries will be exempt, and gasoline would be exempt. And so in that sense, it is very much like a consumption tax that you might find in other states.
And what is the difference between this tax and the business and occupation tax in Washington State? That was an issue that's been brought up.
Similar but different. They do not exempt, for example, groceries or any of the kinds of things you would see in a consumption tax. They have different rates on different products. So agriculture is a low rate, wholesaler is at a low rate, retail is a slightly higher rate, services that are a much higher rate, and they range from 0.2 tenths of a percent all the way to 3%, and it's kind of a moving scale.